Who is Warren Buffett? Warren Buffett is a renowned American investor and business magnate. He is the CEO of Berkshire Hathaway, a multinational conglomerate holding company based in Omaha, Nebraska. Buffett is widely considered to be one of the most successful investors of all time, with a net worth of over $100 billion. One of the key factors behind his success has been his investment strategy, which is characterized by a long-term perspective, a focus on value investing, shareholder value, and a disciplined approach to risk management. Warren Buffett's rule number 1 is, never lose money. Rule number 2, never forget rule number 1. Buffett was born on August 30, 1930, in Omaha, Nebraska. He was the second of 3 children, and his father was a stockbroker and congressman. He developed an interest in investing at a young age, and by the time he was 11, he was buying stocks and selling them to his friends and family. Buffett attended the University of Nebraska and received a degree in business administration. He then went on to earn a master's degree in economics from the University of Pennsylvania. In the early 1950s, Buffett worked as a securities analyst in New York City before returning to Omaha to start his own investment firm. In the 1960s, he formed a partnership with several other investors, and the firm eventually evolved into Berkshire Hathaway, the company he currently heads. Buffett is often referred to as the Oracle of Omaha, and his investment principles are widely studied and emulated by investors around the world. He is known for his wisdom, humor, and down-to-earth personality, and is highly respected in the business community for his business acumen and philanthropic efforts. Some of Buffett's principles to investing are: managers must have integrity and talent. Invest by facts, not emotions. Buy wonderful businesses, not cigar butts. Only buy stocks you understand. His investment strategy is centered on the idea of value investing, which involves buying stocks that are undervalued by the market and holding them for the long term. He believes that the stock market is often inefficient, and that there are many opportunities to find bargains by looking for companies that are trading at a discount to their intrinsic value. To identify these undervalued companies, Buffett relies on a variety of tools, including financial analysis, industry research, and his own personal judgment. He looks for companies with strong balance sheets, solid earnings, and a clear competitive advantage in their respective industries. He also pays close attention to the management teams of the companies, looking for leaders who are honest, competent, and aligned with the interests of shareholders. Once he has identified a potential investment, Buffett is known for taking a long-term perspective. He is willing to hold on to stocks for years or even decades, believing that the market will eventually recognize their true value and drive their prices higher. This long-term approach allows him to ride out market fluctuations and avoid the temptation to chase short-term gains. In addition to his focus on value investing and long-term holding periods, Buffett also has a disciplined approach to risk management. He is cautious about overpaying for stocks, and will often avoid investing in industries that he doesn't understand or that are prone to significant volatility. He is also known for having a conservative approach to debt, and prefers to finance his investments with cash rather than borrowing money. When Warren Buffett talks, people listen. Here are some quotes. Remember that the stock market is a manic depressive. Should you find yourself in a chronically leaking boat, energy devoted to changing vessels is likely to be more productive than energy devoted to patching leaks. The most important thing to do if you find yourself in a hole is to stop digging. And last but not least, price is what you pay. Value is what you get. Buffett's investment strategy is also characterized by his focus on diversification. While he is known for making large concentrated bets on a few select companies, he also maintains a diverse portfolio of investments across a variety of industries. This helps to spread risk and minimize the impact of any one investment on his overall portfolio. Buffett is also known for his preference for investing in blue-chip companies, which are established firms with a long track record of stability and success. He believes that these companies are more likely to weather economic downturns and generate consistent returns over time. In addition to his investment activities, he is also known for his focus on shareholder value. He believes that companies should prioritize the interests of their shareholders and work to maximize shareholder value over the long term. To this end, he has been known to engage in activist investing, where he takes a large stake in a company and works to influence its management and direction. Buffett's investment strategy has also been shaped by his personal values and beliefs. He is known for his focus on integrity and honesty, and has said that he only invests in companies that he would be comfortable owning for a long time. He also has a strong commitment to philanthropy, and has pledged to give away the majority of his wealth to charitable causes. In recent years, Buffett's investment strategy has faced some criticism and scrutiny. Some have argued that his approach is no longer as effective in today's rapidly changing business environment, where new technologies and disruptors can quickly upend traditional industries. Others have pointed to Berkshire Hathaway's underperformance during the COVID pandemic, as well as its relatively low returns compared to the broader stock market in recent years, as evidence that his approach may be out of step with modern markets. Despite these criticisms, however, Buffett's investment philosophy remains highly respected and influential. Many investors continue to follow his principles, and Berkshire Hathaway remains one of the largest and most successful companies in the world. Talking about Warren Buffett and not naming Charlie Munger would be a sin. They met a long time ago over dinner in 1959. Since then they found out they liked each other and Munger and Buffett joined forces. Munger is now vice chairman of Berkshire Hathaway, but also Buffett's closest partner and right-hand man. One of the key lessons that can be learned from Buffett's investment strategy is the importance of taking a long-term perspective and focusing on value. By looking for undervalued companies and holding on to them for the long term, investors can benefit from the market's eventual recognition of a company's true worth. This approach requires patience and discipline, but can be highly rewarding in the long run. Another important lesson is the importance of diversification. By spreading investments across a variety of industries and companies, investors can reduce risk and minimize the impact of any one investment on their overall portfolio. Warren Buffett's strategies has proven to be highly successful, and his long-term approach to value investing combined with a disciplined approach to risk management has earned him a reputation as one of the greatest investors of all time. His approach has been widely studied and emulated by investors around the world, and his investment principles continue to be relevant and influential in the world of finance. Despite his enormous wealth, Buffett is known for his frugality and simplicity. He still lives in the same modest house in Omaha that he purchased in 1958 for $31,500, and is known for his modest lifestyle and lack of extravagance. For more information on Warren Buffett, there is a good biography called Buffett, The Making of an American Capitalist, by Roger Lowenstein. Or if you want to learn more about investing like Buffett, the book, The Intelligent Investor, the definitive book on value investing, by Benjamin Graham and Jason Zweig, should serve you well. By following Warren Buffett's principles and constantly aim to learn more, investors can set themselves up for success in the long run. You have listened to Money Mindset, Financial Freedom.